to get more information about how he sees the market. Nick Twidale from FP Markets joins us now. Nick, good morning. Thank you so much for joining Ausbiz.
Good morning. Thank you for having me.
Okay, so we had a bit of movements overnight. The Aussie dollar has been really strong, probably predominantly off the back of the weakness in the US dollar, which of course is feeding off all those lower treasury yields that we've seen. But aren't we in for a bit of a reversal of that trade, as in markets had just moved too far too fast?
I think that's a bit of a consensus of opinion that we're seeing across some of the markets now. I mean, as you said, those US Treasury yields, they've tumbled massively from, I think, the 2-year. We were talking about way above 5%, and we're down at like 4.3 something now. They're huge moves, and that's why we've seen the likes of the Aussie dollar move up so well, and the rest of the majors have as well. Let's be honest. I think some people, and the dip we saw in the stock markets today in the US, these are corrections, and it was a very strong correction across the equity markets, like 1.5% on the Nasdaq. I think it was the worst day for a couple of months, and that is translating through to what we're seeing in the currencies. I think the Aussie's still nicely bid, let's be honest. And while we're seeing relatively good news across the globe and we're seeing commodities going fairly well, the Aussie will remain bid. But I do think maybe the market's got a little bit ahead of itself with regard to the Fed rate cut expectations. We're hearing Fed members coming out going, hold your horses a bit. Jerome Powell probably went a little bit too dovish at last week's meeting. And maybe there's a bit of a correction for the market. And I think the other thing we've got to take into consideration at the moment when we're trading currencies is, of course, this time of the year. Liquidity will start to come at a premium now, and we will start to see some quite whippy moves. So I think there's danger both sides, but I think for me, moving into the new year, I'd be fading this move higher in the Aussie at the moment, because I think we might have a little bit of a turn in that dollar sentiment. I think you were saying before that we're now kind of expecting maybe 1.3% worth of rate cuts by the end of the year from the Fed. I think that's the market. Certainly what we're hearing from the Fed, they're on 0.75. So someone's wrong somewhere, and I think that will translate through to a bit of volatility in the market. Maybe even as early as the first week of Jan, when the guys come back and start to try and make their budgets again.
Yeah, absolutely. I mean, markets always have a habit of moving in the extreme direction, either to the downside or to the upside. I often follow the work of a gentleman called Michael Howe from Cross Border Capital, who does global liquidity analysis. He's also from the UK. And he talks about, whilst he's bullish on global liquidity continuing to trend up over 2024, he is cautious on bond yields because he thinks the term premium is still not going in the right direction for US longer dated treasury yields, and he sees them even backing up as much as back up to 5%, which if it did come about, it certainly would put a big ruction underneath both equity markets as well as currency markets. Whilst that may not actually transpire, Nick, do you feel that, again, just working off your theme, you're fading the Aussie dollar, that we could have more of a pullback than what some people are thinking at this point in time as markets rebalance in the other direction?
I think so, yeah. I mean, we're seeing, like you said, we're seeing these equity markets at record highs. To me, I don't think they're quite justified, but we're hearing a lot about the Santa rally at the moment, and certainly in currencies as well. The dollar has taken a massive dive against most of the majors, let's be honest. And I think there is room for appreciation as we move into the first half of next year. So I think there's a valid argument to see that. We're going to be, like everyone else, like all the central banks, we're going to be watching data, and those first data points and prints that come out in January, I think, are going to be key to set that trend for the new year. It does feel like the market may have got a little bit ahead of itself in December and just got a little bit too Christmas happy, I suppose.
Yeah, I love it. Now, what about the likes of a sterling? How do you think? Is it going to, again, just be pretty correlated to what happens with the US dollar?
I think so for cable, yes. Obviously, like I suppose for a lot of people, a really good print in CPI last night, coming in like over 0.5% lower than expected on the core. I would be favouring trading sterling on the crosses in line with that, because now I'm even hearing expectations of a Bank of England rate cut as early as March, probably more like May, and so when you're looking at the cable, you've got those two. The interest rate differential trade probably doesn't work too well now in cable, but I think with that lower CPI print, the sterling itself on the crosses, you're probably going to be looking to fade moves in sterling, maybe buying dips in euro sterling, looking to sell sterling Aussie to a certain extent as well. Probably sterling Aussie, it's just come to my head now that we're talking about it, is one of the ones I'd be targeting, because we've still got that rate differential interest from the RBA that we could see the next move up from the RBA and down from the Bank of England. So from that perspective, maybe sterling Aussie's a bit toppy at the moment as well. So I think that's how you're going to have to play these. And it's going to be whippy in the dollar, whatever happens. Taking the dollar out of the equation, certainly with something like the sterling, is probably the way to go, at least for the next couple of months.
And what about the euro quickly?
Once again, I think that ties in with my my dollar view that maybe we've come a little bit too far, a little bit too fast. It topped out. There's that chart that I sort of threw through to you. It topped out again on that recent highs and the trend line. So I'm kind of happy to fade that at the moment. But the next week or two, we've got those potentially wild and whippy markets where liquidity starts to fade in and out because you've got skeleton desks across the road. So it wouldn't surprise me if you get a nasty shock move to the top side to take out stops above those levels. And then you look to fade that and see if we get some dollar strength as we come into sort of proper markets again in the first week of Jan.